Joining us now on the line is Tino Kambasha. He's Executive Director at Imara Edwards Securities with the latest on the Zimbabwean markets and the kind of activity we're seeing on that end. Tino, thanks so much for joining us. Let's get straight into the kind of activity we've seen over the first month of the year. I mean, the industrial index has surged 21%. We've had the mining index having gained 29% year to date so far. What's been driving the momentum?
Thanks, Alishia. Zim markets actually bounced back beginning of the year, looking mainly at consumer retail stocks, mainly driven by Delta and Insco and OK. And also we've had a bit of a run on Econet on the telecom sector. And, strong festive season and declining money market rates have made stocks more attractive, I guess, yeah. So that's what's been pushing us up, and we're seeing a very good run at the moment.
I guess this is illustrative of just how consumption the Zimbabwean economy still is, Tino.
Yeah, we're still on those ticket dollar things, small ticket items, your drinks, your beverages, nothing really big. So OK Zimbabwe, your dairy boards, your Inscos and your Deltas are the ones that are driving most of this consumptive run, but we think it's going to pick up going forward, and we're just waiting to see that happen.
Looking at one of those consumer stocks, Delta Corporation, I mean, it was the first listed company to publish its interim management statements since dollarization of the economy. Tino, run us through what you made of that statement that was released and your view on Delta at this stage.
Well, firstly, I think we really need to commend management. Very strong team, Mats Valela and Pearson Guerrero, they're driving that and releasing quarterly results. It's best practice around the world. So we'd really like to encourage the rest of the companies to follow suit. And just speaking about Delta, we've seen them increase volumes all around, but except in Seckam beer, which is a low-margin beer. But in sparkling beverages and clear beer, they've increased, and they're up 14% for the quarter, still driving, but they're more mature on capital expenditure, so we should expect more free cash flow going forward. Still a long-term buy, we think. Still very exciting and a great Zimbabwe story.
Of course, what is interesting is that the growth that we're seeing on its side of things, Tino, coming through despite the fact that we've seen minimal price increases being pushed through by the company to the consumer. Just how sustainable is that moving forward?
Well, they're a very mature company at the moment, so they can absorb a bit. We saw them having a bit of duties increased, but they've taken that knock. The problem with Zimbabwe as well is that, Delta would probably want to price their drinks a bit lower, but they can't due to the dollarized situation. We don't have any coins and such. So you find most things are either $1, $1.50, $2. So they can have a bit of fat to absorb that. So that really hasn't extrapolated onto the consumer. And going forward, we think that it'll settle in a very calm way, and again, that dividend play will just come through.